I love this question. I actually enjoy the personal finance more than anything. Hi, Mitch. Do you suggest lump sum investment or dollar cost averaging? You could do both, one or the other. You want which one is better? I'm going to give you an answer that I don't think a lot of people are going to give you. The one that you could do now is the better answer. Studies that I've looked at have said lump sum investing over time has proven to be a little bit better return-wise. But not everybody could start lump sum investing. Most people, we invest monthly, we invest periodically, regularly into a 401k plan, what have you. You do the one that works best for your financial situation. Now, if you do have a large lump sum of money to invest, you come into cash, you want to invest it, and you are worried about risk, about the stock market, about volatility, those sorts of things, that really speaks to your personal finance, such as your risk tolerance, your time horizon until your financial goals. So in that case, you might want to, let's say, dollar cost average a large lump sum of money into the stock market over, it could be a 6-month, 12-month, 18-month period. Again, this is what puts the personal into personal finance. You have to do the one that works best for you. If you are a truly long-term investor and you don't need the money for a very long time, 10 years or more, then I'm saying lump sum. Anything else, you're really just trying to time the market. I think I'm right by saying history proves that market timing is a pretty tough thing to do.